TGIF Warriors NFP on the docket. How you, Brand? Out for your morning constitutional. AJ, how you doing? Team, how's it going?
Hey,
Metals
good morning, Coach.
Hey, Blake. Metals are coming. Hey, Stel. So metals are coming in stronger.
Yeah, man, we got that gold sitting right at resistance right now. Bigly resistance.
Yeah. So if the dollar gives it up, the gold and silver should smoke. What's let's see, who wants to start off? Stel, you have a view on the dollar here?
Good question.
I mean, it rebounded pretty good from
yeah, my medium-term view is still that the dollar goes lower.
Yeah.
You know, I think I've said for a while, I think the Fed is done. Economic data actually from everywhere is starting to look pretty bleak,
yeah.
and U.S. employment is really the last fort that's standing, and I think that's going to turn too. But you know, in terms of you talked about metals. Well, for those who are ForexAnalytix members, they know this morning I took off a third of my long from 2309. So that's gone well. Again, this is the second time I'm doing this as silver reaches this 2450-60 area, which is quite important. I'm still very bullish, but you know me, I like to trim and add and retrim and re-add. But
unlike
Blake,
your hair.
Unlike my hair, which is gone a long time ago, I think Blake is absolutely right.
You can't trim it, and it definitely nothing gets added. So
exactly, I think Blake is right. Gold right here is resistance. Actually, silver too. If you look, there is a trend line from the May highs, which comes in around these levels now. So we are at resistance for silver as well. The dollar is a tough one, I think. Because the question is, what happens if data is bad? We talked about this on the Flow Show with K-Man this morning. And we said, what happens if data is bad? Well, that's theoretically good for risk and bad for the dollar. What happens if the data is really bad? That's a big question. And that's a very difficult question to answer, because eventually stocks will have to how should I say, react and come in line with fundamentals. You know, you can't have a collapsing economy, or maybe not collapsing is a hard word, but an economy which is pointing towards recession eventually, and stocks, going higher like nothing matters. No, of course it will matter. So it's a difficult one, and I think the dollar is, well, it's tried to break out. It broke out above that 103.50. Now it's going back towards that level. It's tricky. I don't know is the answer. I continue to think that for choice, data is going to be disappointing to the downside pretty much everywhere. But we wait and see, and it's a guessing game today. I mean, anybody.
Nice what reversal else? In yen.
I wanted to point. Wait, I'm sorry.
Go ahead.
Oh no, I just wanted to say there's one thing that it really stands out today, and I think that needs to be talked about. We have data, of course, the jobs reports front and center. Markets are going to, how the markets react. We're going to walk through a bunch of different scenarios today. But I think the thing that people are not really looking at right now is this crude oil is about ready to break out to the upside.
Yeah.
It is. I was
wrong about that.
$85. It's got a bull flag pattern. That bull flag pattern actually points us back towards 100. And this is that natural tax, just that tax on consumers that we just don't need. And as here in the United States, Dale, as education or college repayments start again.
Oh yeah,
you got we're all tapped out here in the U.S. from all the stimulus that we got over COVID. All those savings have depleted. Now you got crude oil,
squeezing people.
I'm paying $5 a gallon, and this is not a complaint, because Steve will jump in and tell you how much how much they're paying. But I'm just talking.
Hey guys.
Hey, Grega, and I'm just talking about Americans just in general. But you talk about the global consumer. You get crude oil back above 100. You put another 15% premium on this energy cost. Just one input here. How's that going to affect you know, I think crude oil is at the higher crude is not good for stocks, and it's not good for the economy anymore.
For
So
the
that's,
oil
anything.
shares.
that's my take.
Yeah.
You know, and look at what's happening here with the Widowmaker at major resistance here. And I hope Europe is as fortunate as they were last year with a warm winter. But if they're not, and what's going on with their supplies, unless we could really supply them, this looks like this is carving out a bottom.
Yeah.
So
It sure is. I mean, it looks like that. Those basing patterns look damn nasty.
Yeah.
I've Grega's here today, which is great. Dale, I've got like a lot to talk about today because there's a lot of Chinese stimulus that came out.
Grab the charts.
No, I don't want to do it just yet because I know Grega wants to show some charts.
Grega.
Stelios probably has more to say, but I do need to cover this. We have a lot of things that happen in China overnight and really this week, and the Aussie, I need to talk about that. We have Banxico, big announcement out of Banxico yesterday. We need to talk about that because it all plays into what's happening today. And then we got to talk about different scenarios with good or bad data and how that is going to be translated or possibly translated in the markets. So I got a lot to get through. We got a big number in 24 minutes. So Grega, maybe you want to take over the
control. Yeah, go ahead.
Yep. Just a second.
So Grega, how you been? How was your holidays?
My holidays, well, they passed very quickly. Now I had kids at home next to my office for the last 2 weeks. It was pretty stressful for some time. So now when there's a school, now will be better.
That will be good. Get them back in school. And just remember, school is cool for your kids.
Yeah,
that's it.
They are very excited. So
good.
Okay, so you can see the charts.
All the node charts.
Yep.
Yes.
Yeah. Okay. So I will start with the US yields. I still think that we are in uptrend here. So I think that even after today's data, of course, it should be very important trigger for potential next leg on the US dollar. But so far, I see still incomplete recovery here, looking to make these 5 waves up even higher maybe. So another high is what I would be looking for possibly this month, but then later this year, I would be expecting a major reversal since I think that the higher degree trends here on notes yields are coming to an end. At the same time, as I said already last time, 105, 106 is very big resistance for dollar index at the same time. So maybe some room left here for some recovery, but then eventually we are going to see this reversal this year.
Do you have fib retracements on the dollar, or is it just waveform that you're looking at? I mean, the break from 114 to 99.5, I'd say was okay. There you go. All right, so you're looking for that pullback to 102. That's halfway back, and then one more push.
I think that we are now in the middle of this pullback.
Yeah.
Okay, so I'm looking for zigzag to extend a little bit higher, but there is also another interpretation, very valid as well, which shows that this 5 waves down already accomplished here in February, and that actually we are just in a sideways price action for the whole year, which after all makes sense. If you just draw this square, you can actually see that for the whole year, we didn't move much actually. We are trapped in the big range. And I look at this as a correction or just a pause. And if I look back, we can see that the very strong move before that was clearly to the downside. So I would be expecting something similar to unfold here, let's say in 2024. But of course, we need US yield to top for this kind of scenario. So now I think that we could be coming into the late stages of these current cycles, but we know that we will most likely have to wait on much more evidences and data to make sure that this is really already happening. Looking at the euro dollar, maybe some short-term views here. I think that we are making this wedge. This wedge has been broken. recently. So we could be now in the period of short-term consolidation. I would not be really trusting any kind of a real breakout here below 107.65. I think that's still potential support here because I doubt that wave B was such a small. So I think that something more choppy here could unfold in the first week or two of September. I like, for example, I like Aussie much more to the downside. I still think that that's healthy compared to the euro. I mean, I still think that that's a healthy downtrend. We have lower highs, lower swing lows, and this rally from the recent lows is not really impulsive, right? So we know that impulses are normally strong, but this recovery so far at this point is not strong. I'm paying attention to this channel, and as long as we are below these trend lines, especially the upper one, for me, that's still a downtrend. It just
Grega?
Yeah.
Gosh, we're our timing today.
Yeah, you
go ahead, man. Go ahead.
And I was
going
to
to
say
talk at the same time.
I was going to say something about that too. I mean, and we're going to, just because you're mentioning the Aussie, I'm going to talk about all what China's done over the last week. And I have to say that
they're trying.
The Aussie's very unresponsive to all of this. And that's scary to me. It really is. Like, if the Aussie and can't respond to this, or the CNH even better, if that can't respond to everything that China's doing, that raises a few eyebrows. So anyway,
I have a question. I'm confused in silver and gold. Gold doesn't look as good as silver. Are they diverging?
Well, I think that in general, I mean, if you compare maybe Aussie with gold, or even some other major currency pairs with gold did still very well for this in this week, in my opinion. So if maybe data today will send the US yields to the downside, and at the same time we are going to see then obviously the response higher on gold, I would pay attention to silver. I think that to silver and gold, I think that it's acting pretty well here and strong, and I assume we could reach this upper side of this range that we are in since start of summer or so. So would be looking for more upside here on gold, 1970, 1990. That would be my resistance potentially for next week. Okay, so
is the count for 1800 off the table that you showed before?
That's the big picture.
I see. Okay.
Yeah, I still think that we are in a wave B, and that major support for gold is still maybe a little bit lower, 1800. Let's not forget that I have this chart here, that gold, that's the longer term chart, okay? That gold done pretty well. Look where we are trading, despite higher US yields. Okay,
great point.
Yeah, so I think that if we are close to the top, that's the 2-year, by the way, if we are close to the top, then I think that obviously gold will be much easier to continue higher when the US yields come to the downside.
Okay, got it.
Yeah, also, let me check what I have left here. Dollar yen, this one, I know that everyone is waiting, it's like a bump here for the opposite direction, but I'm not really sure we are there yet. We still see an incomplete, at least this short-term structure here away from July levels. Okay, so if that's the 5-wave rise, the final leg to complete the higher degree uptrend, it still have some room to accomplish this pattern here. We are now in a wave 4. Notice that very nice support was around 145, and then you have 144 at this 38.2%. So I think that 145, 144 is still very good support. You definitely want to see these levels broken before considering that we are topping out here. So for now, I still think that it's a little bit too soon. So I see in the short term more dollar strength, but as I showed on with the US yields and dollar index charts later this year, this path could turn around.
So Grega,
and I'm going
to ask if I can take over from here, because we got about 15 minutes before this data comes out.
Thank you, Grega.
Thank you, Grega, for all your looks. I got to ask you though something, because here we go into the jobs data, and this is the month where I think the risks are tilted more towards potential weakness. A lot of models are pointing towards the jobs report's going to come in a little worse than expected. And this is going to be kind of tricky because there's not a lot of liquidity. So and here's the thing though, if the data is bad, and let me quantify bad, and let me just kind of give you a couple of different scenarios. Let's say the jobs number comes in where we create less than 100,000 jobs. I would view that as bad. I mean, Stelios, do you have any view on that? Like if we came in and created 80,000 jobs today, the market's looking for 160, 170,000 jobs, depending on, what you're, which news or which economists you're looking at. But, like 170,000 jobs here, again, if it depends on where you're looking, you might see that number a little bit different. But what would you quantify as bad, Stelios?
Good question. I mean, based on the range of estimates from the various banks, I think anywhere between, let's say, 140 and 200 would be kind of neutral.
Yeah, that's a Goldilocks. That's a Goldilocks number. Like,
so hey, anything below that,
we're still creating jobs.
Yeah,
shit isn't hitting the fan. That's fine, right?
Yeah. Even if we're close to the estimates on the downside, I think the market's going to treat that as saying, like you say, it's still relatively okay.
Right.
But anything, double digits or lower, then that's starting to get into trouble, I think.
Right. So let's say we create 80,000 jobs. Now this goes back to Grega really quick. We create 80,000 jobs. That's a weak number in my view. The headline number is going to be the mover today. I know, we obviously, a lot of us that trade, and especially if there was more liquidity, we'd be like, okay, well, let's look at, what the average hourly earnings are. But I think the headline number is going to be the mover today. Anyway, let's say the number is poor, dollar comes under pressure, dollar starts to break lower. Do you think, because the dollar has been in such a bullish trend over the last, month, do you think we could shake it off? What do you think, Grega?
Well, I think that then we'll just see a deeper correction here. I still think that 102 would be next support then for next week.
Oh, okay. All right. Well, 102 is then this is where you're going to say 102 is really the line in the sand for you for the dollar then.
Yeah, exactly.
Okay. All right. Thank you very much. So I want to let's talk a little bit more about the dollar and where we're at. So I'm going to zoom out and you can see the dollar index, really clean channel, right? We've had a hell of a squeeze. This is, remember, right here, guys. Let me just make sure I'm very clear on this, because I know a lot of you listen to macro people and you watch a lot of YouTube and you're watching death and destruction of the dollar, and the dollar is going to go to hell, and BRICS are going to come out and replace the dollar, and all that stuff. That was right here, by the way, right? And we spent literally the last month going higher. It's positioning, and remember, there's been a lot of talk about de-dollarization for a long time since I've been trading currencies, which has been when I stopped trading equities predominantly and went to currencies was in 2001, and ever since then, all I've ever heard is the dollar's going to go down. So when those voices get really loud, it's positioning, and that's kind of what the positioning squeeze that we saw in equities this week. You got Michael Burry and everybody else getting short, and equities are just a few percentage points from all-time highs. So but I think the dollar's in a really tricky spot. I don't know if we should be bullish or bearish from here, because we have our range is very, very well defined. 102.85 is support, 104.85 is resistance, and you can see, and if you've been a long time listener here, or you're in our community, because I always tell you, before a big news event, we tend to be right in the middle, because the market's pretty undecided here. It could go either way, good number, bad number. We're kind of, it's kind of like a 50-50 right now, whether the data is actually starting to weaken or not. Now, I think a lot of people would agree or probably argue that the data is really close to start weakening, and I am in that camp. I think that we are probably going to have a relatively rough patch for economic data here in the U.S. over the course of the next several months, if not longer. But did it start in August? We'll see. I mean, we're going to obviously see in about next 10 minutes. But I think the dollar is very, very close to being very bullish or very bearish. So we'll have to kind of map it out. Just realize that we have very, very clear. We're up against resistance, very clear support, very clear resistance ahead. And there's a good chance that today we can test either side of this range. I've been telling our traders this week, this is your play, this is your sandbox. You play in your sandbox. You get out of your sandbox, things might go a little crazy. I do want to share with you just a few charts that I think are really important. So Dale, you talked about gold. Look, we have a descending trend line. We came into it today. 618 retracement, that's a golden fib level. We're at it the last 2 days. Horizontal previous support, very big pivot in the market. It's multiple confluence right at 1945, 1950. You can call it on spot. So if we have weak data, I think the very binary trade today is weak data, weak headline number. Gold is going to rip. We're going to see yields fall, gold's going to rally, and you're going to see, gold trade towards 1985, excuse me, and 1987. Flip side is the number comes in strong again, and we walk away today and say, damn, man, this U.S. economy is resilient, which, by the way, that's happened quite a bit over the last year. Remember, everybody's thinking recession last year. It's been a year and everybody's still is like, damn, U.S. is still creating jobs. Yes, we adjust those numbers every single month. I just heard somebody say that cumulatively, Dale, can you say that word for me? Cumulative. See, you can't say it either. Okay.
Cumulatively, come on.
See, Stel, you can't either. I'm just kidding. Okay, so really over the last year, we've taken 300,000 jobs off of those numbers in adjustments. And matter of fact, or 700,000 jobs, 300,000 of it was or some crazy number. Anyway, so but we're trading off the headline number. That's what the market is, right? So if we get a strong data, gold's going to come back down. Just realize that. So gold, I think, is a very pivotal level. I need to talk about the Aussie because obviously there's a lot of Chinese news that's surrounding the Aussie dollar right now. Look, China has lowered FX reserve requirements. They have also overnight they're supporting home buyers, developers. They lowered rates by 2%, I believe. I think that's the number. Is that correct, Stel? I think that you probably know those numbers better than me.
Sorry, which one?
China. They adjusted their rates quite aggressively last night, and the Aussie took a little spike higher on that news last night. And then also they're scrutinizing trading. There's a lot of headlines actually in our news and research room regarding that. All of that should have really supported the Aussie, and the Aussie is still on a bear flag. Grega has it up on his charts, and he's more of an Elliott wave guy. But from a basic technical analysis point of view, we are at weekly trendline support. This is spike COVID lows. This is a weekly chart, right? We've pivoted off this 64 cent level. I mentioned on the week ahead video the last 2 weeks how big of support this is. We're sitting on it. But the fact is, if the data comes in strong and you see dollar strength, and let's say stocks don't like it. Stocks say, oh man, yields are going up. Fed's going to keep rates, higher for longer, and equities start to come down. The Aussie, if it breaks back below 64 cents and 63, 65, it's bearish. Any which way you slice it. If you can't rally on all this positive China news, I don't know what's going to make it rally. Honestly, I mean, we're going to have to see copper double or something. I don't know. Aussie can't get out of its own way. So keep your eye on the Aussie dollar. Kiwi is the same same thing. We can't get above 60 cents. We're just
Yeah.
pivoting at this big 618 retracement at 59 cents. But, all we're doing is we're consolidating losses, and that's scary.
Sell the weak sister.
Yeah, right. They're weak. They're weak. Okay. One other thing I need to mention really quick, Banxico. Banxico made a big announcement yesterday that they're going to be unwinding hedges. Do you know Banxico, they intervened. When did they intervene? Right after COVID. So what happened? Well, the dollar Mexican peso basically went, think about this move percentage wise.
Wow.
Yeah, this is COVID lockdown.
Yeah.
The dollar Mexican peso lost 40% in value over the course of what? A month or two? So
Yeah,
of
it took
course,
all this time.
Yeah, Banxico had to step in. They've been providing liquidity. It's been a tailwind for carry trades. Stocks have been going higher, but Mexican peso rates are at double digits. And it's been the darling of the currency market. You just buy Mexican pesos. You talk to K-Man, he does it every day almost. He's like, oh, dollar Mexican peso went up, I'm going to sell it. And then he makes carry, and he's been doing really well with it. That's the darling. But Banxico has gotten to a point yesterday that they said, hey, we're going to start unwinding these this hedge. And that has put a little giddy up in the dollar Mexican peso. And I was talking to some pretty experienced traders yesterday, guys that I've traded with over the years, from a fund standpoint. And guys, if we see any weakness in equities, you're going to see this carry trade unwind in a big way. So I'm going to be watching really carefully this 1745, 1750 level. We start getting above that, and you can, Dale, we've seen short squeezes in the dollar Mexican peso, right?
Yeah.
They're scary if you're on the other side of it.
That's a great setup, high or low. You know what? It kind of looks like the S&P's is retraced a lot after that first blast up and then the pullback.
Yeah.
And now we're, Grega would say C or 3, right, Grega?
Yes, exactly. I would be looking for limited upside. Crude is also still very strong. So at some point, I would be looking that trend to sell dollar Mexican peso.
100%. If we could get a 10% move higher in the dollar mex, that is what I'd be looking for too. And you think about like what that actually looks like. If you're like, let's say you're long at 1720, I'm just going to use this as an example. You have your stops at 1669. Your target is 1880, and you have $1 million in currency on. That's a $93,000 gain. Or you have $100,000 currency on you. That's $9,000 in gain. Oh, you have 10,000 in currency on. That's a $900 gain versus a $300 risk. Those are the types of squeezes that happen. And really fast too, really fast. So just a little heads up, guys, for those of you that trade around some of these emerging market currencies. Now we have 2 minutes before data comes out. Let me go ahead and grab everything, and I'll set up our screen the way that I normally do it. Stelios, we got 2 minutes. Any last minute words ahead of the jobs report here?
Just want to say I don't think the dollar is going to be replaced by gold or a basket or anything anytime soon. Just in case.
Okay.
No, I think you covered it pretty well. I do agree that gold is the one that is at basically a very important level. So that's probably the one that's going to be moving most. But let's see.
All right. I think the data is going to come in a little weaker today. Dale, how about you? Any thoughts here?
Yeah. Yesterday I said I'm waiting for a break to 102 in the Dixie, and Grega coming in here today. That's what I'm waiting for. So I'm not going to short it up here in case the light switches the other way, but
all right. Grega, we got 30 seconds. Any last minute thoughts?
Let's enjoy the ride.
Enjoy the ride. All right, to the left, guys. Well, first of all, data flash. This is part of ForexAnalytix. You get it with ForexAnalytix. It'll just show us the data as it's coming out. Sometimes it comes out faster than Bloomberg. Sometimes it doesn't come out as fast. It's kind of sporadic, but we'll see data all over the place. We have the dollar index to the left. We have the S&P right here in the middle. We have 10-year yields over here to the right. So
Okay, let's see.
let's see. Here we go.
Participation is up.
Dollar is coming down.
187. So it's slightly better, but
Yeah,
hourly
well,
earnings are 0.1 lower.
So the headline number comes in better than expected. And the average hourly earnings are down. Dollar's under a little bit of pressure, not a lot of, but look at the yields. Yields are coming down too.
Yeah.
The market's putting more strength, more weight on the earnings, I'm guessing.
I was wrong about that. I was wrong. I thought they'd react more off the headline number. That's interesting. Okay. Well, it's good because I'm actually short dollar Swiss right now. That was like kind of my setup going into today. From
unemployment rate rose, but then again, participation rate rose as well. So that kind of makes sense.
Unemployment rate is what, 3.8.
And we got some revisions too about some revisions which will be revised again under, it'll be pushed under the radar and no one will see it, and and in like a week, oh no, we lost another 100,000 jobs.
So gold broke out.
What's that?
Gold broke out.
Gold is breaking. Gold is breaking. It should be breaking. It should be well above 1950 now. Oh yeah, here we go. So watch gold, guys. I mean, gold probably trade up towards, because this is going to be one of those days where it's Friday and who wants to get in the way, right? Like it's Friday, it's jobs. Who wants to get in the way of this of a move at this point in time? I know I don't. So anyway, your takeaways from here, Stel, and before we wrap things up.
Well, the important thing, the interesting thing is the participation rate, which is driving unemployment rate higher. And I read this piece a couple of days ago talking about how the average US housewife is coming back into the workforce. And they were making it sound like it's a really good thing. And I unfortunately, I fear it's the opposite. I fear they have to come back to work because it's difficult to make ends meet with things rising, the cost of things rising faster than wages. And also, we saw that the amount of money that people had put aside from COVID is now gone. So what do? They borrow, and another headline a couple of days ago: Visa and Mastercard are raising their rates. So this is not really good on the employment side, even though the headline number of payrolls is better than expected. I don't know. I have. It's not great.
Great points. Hey, and I want to mention, because Tony said, well, why are stocks going higher? What? This is a good number for the stock market. Now, I think the stock market, you don't want to chase it into this resistance zone. But the reason why the instant reaction was stronger for the stock market is because inflation is down. Inflation is coming down. You see that the average hourly earnings come down, yet we're still creating jobs. Yes, there's a lower revision, but we still created 180,000 jobs minus a revision, 150,000 jobs. It's not a bad number. It's not a bad number. And the Fed's doing its job because you see the average hourly earnings going down. This means that the Fed could, maybe not raise rates going into next month. And that's going to be the real key, is the 20th of September. So in 19 days, we're going to find out exactly what's on the Fed's mind and what the Fed's going to do. But at this point, I'm assuming for those of you that have a Bloomberg terminal in front of you, expectations might be coming down on a rate hike going into this month. So after today's data, now CPI is going to be more important in my opinion. But again, this is a kind of a Goldilocks number. Like I said, I wouldn't chase stocks up here, not into this resistance, but that's why stocks instantly responded higher. Speaking of which, I gotta say one last thing. I know we mentioned it regarding crude oil. This is a very bullish setup, guys, for crude. I mean, I'll just draw it like this: a breakout in crude on this pennant. Right. And $85 is obviously really key. Let me move this out of the way. You can see it right here. And Greg, I'd love to hear if you have any counts that take us up towards, $95, because that's what my bull flag pattern says, $95. And I don't think $95 is going to be good for stocks. I just don't think so. I think
but
Dale, when you're
correlation with crude oil and stocks, I mean, if you would overlay the charts through history, they are pretty tight.
Close.
They are, but there's always a breaking point. There's always a breaking point, Grega, and yes, correlations are great, but not causation. And correlations will break when you are directly affecting the consumer right now in this environment. That's why it's so important to pay attention to. It's not like, oh, you know, this economy is flush of cash and you've got quantitative easing and liquidity pouring into the markets. Yeah, I would say, hey, if crude's going to $100, dude, we should be buying stocks right now. But if crude is going higher in an economy that's slowing, where so many headwinds are hitting the consumer, I think we are getting to that inflection point where crude going higher is going to be bad for stocks. And that's the point I'm trying to make. Yeah. We start getting above, like, you know, these levels, and you know who else is making that argument? And when he said it this week, I heard him say it this week, I'm like 100% agree, is your buddy Luke Groman. Was it Luke? I think that said that. I think Luke said that this week, Dale. And you know, I'm in that camp too. I 100% agree with that. So yeah. So anyway,
we the shale production that was cut off, and that we're at peak, I don't know, peak energy production.
Yeah.
But if crude comes higher, it cannot be good for inflation either. I mean, if we go towards 100.
And that's, again, that's 100% my point. If it's not going to be, it's going to make the Fed's job nearly impossible for them to start cutting rates. And inflation expectations will start to tick higher, because the biggest input right here is going to be energy. And that's, how's the Fed supposed to start cutting rates or stop raising rates if inflation expectations start to go higher again? And that's the point. And that's why equities are not going to respond well if crude rallies. Hey, I just brought it up, but one other thing I want to state is, watch the dollar index here, because the dollar index is coming down towards support. The 200 DMA is not too far away. You can see the 102.85 level, or 102.80. That's really big support. Watch the dollar Swiss. I shorted this yesterday. If you were watching the trade-off, the Pepperstone show on Wednesday night, this is my setup. I was looking for a rally into 88.50 to sell into. So hopefully some of you guys got short that. I stayed short today because, I mean, that was manageable risk. So now this is going to be really tricky. Watch the Aussie dollar here. Stocks are going higher. The Aussie's, getting towards flag resistance. Do you play this on the long side, Grega? I'm not. I'm just asking.
I would be selling even higher. I think that's still a downtrend as long as we are below 660 or so.
Yeah, right around here.
Your blue line, or so.
The teal line right here. Yeah, I'm with you, buddy.
Hey, Blake, I know, I can see how Grega's yen count could work, but just pull up the weekly yen chart. You have a key reversal where we took out last week's high, last week's low.
Yeah, we did.
That's an ugly candle.
Yeah, and Richard brought up, I don't get it. What's happening right now with the dollar CAD. Do we have Canadian news? Because Canadian jobs report is next Friday, by the way. I don't get this, why the dollar Canadian is going higher. I don't, and I don't have any Canadian exposure, actually, while I'm thinking about it. But the dollar CAD really had a pivot off of this support. I don't get that. It's I would say, oh, okay, thank you. CAD GDP was a miss. It was Canadian data. It's so weird because, the backward looking data, I can't believe the market's really trading off it. But then again, oh yeah, here we go. That was it. Dollar CAD, really, really big reversal. I care more about the jobs report, but hell, that's moving the market today. Thank you. Wasn't even paying attention. But yes, Dale, going back to the dollar yen, big reversal week. We hit new highs. We reversed. And,
coming into Grega's level there, the 44-ish support level.
Yeah, 44.50. And I'll tell you, if I was the BOJ, I would use this opportunity to step in front of that and catch the momentum while it's going in that direction. Because they obviously want to be a little bit enact some protectionism once you start getting towards 150. It's like, well, we got pretty damn close. I don't like it up here. Why not press a little bit when the market's, going in this direction? They caught everybody on the wrong side when we were down in the 130s. Why not catch everybody on the wrong side up here at the 150s? Because there's so many banks that are targeting above 150 now in the dollar yen, that why not catch the market on the wrong side once again, like you did down here, So if I was the BOJ, but I ain't. So there we go. And guys, gold is maintaining its breakout, and I think we got to respect the fact that it's holding above 1950 today. So keep that one on the radar. I think while it's above 1945, 1950, that, remember, this is a golden fib here. While we're above it, I wouldn't want to be on the short side of gold. How's silver doing, Stelios?
Twice as good.
Look at that. And we are at massive resistance here on silver. All right. Well, hey, Dale, I want to say thanks for navigating us through the landmines of the markets this week. And we had a huge group today for the end of summer. So I want to say thank you all for joining us. Grega, really appreciate you being here today. Stelios, I think he already had to leave with his kids, but Stelios, if you're still here, thanks for being here. Steve's always lurking in the background. But I want to thank you guys for being with us and supporting the cause. Make sure you check out ForexAnalytix over the weekend. Take the $1 trial. Jump in our chat rooms. We have probably the most active chat rooms in the markets. This is just from the last hour, so you can see this is our general chat. We've got a lot of people, even in there, navigating through the markets. So jump in our, in the ForexAnalytix community, get the platform, jump in our chat, and come hang out with us. That's where I'm at throughout the course of the day. And Dale, that's it.
All right. Well, I would just say, don't quit your daydream. Make it real. Turn it into reality. So don't quit your daydream. So the way to make it real, I tweeted yesterday, Blake, that interviewing great traders and analysts and being part of trading communities is my edge.
And that's a huge edge, buddy. It really is.
So it's made me better. So if it works for me, maybe it'll work for you. So we bring you a good content with, I know this week was a blank, but we bring you some real great traders every day. And there's great traders every day for more than a half an hour interview in the rooms. So
yeah, and Dale, you do some great interviews each and every week. This week, it's been, it's the end of August, and so many people are out. So of course, we have to take a pass on this week, but you guys should follow us on Spotify and listen to Dale's podcast while you're, especially with because we're posting all the macro interviews there. We haven't done it so much this month because everybody's been out, but starting September, we're going to have all of the macro interviews on Spotify, so you can listen in while you're on the treadmill, or walking your neighborhood, or doing a triathlon. Make sure you plug in and listen to Dale's soothing, beautiful voice.
Well, you know what, Blake, and it's really not my ego, because I do check out the competition and channels that have multiple 50, 100,000 views, and I watch the hosts because you could learn. And I'll say something, that my interviews are certainly not boring, and there are a lot of hosts out there that just script the interview, ask the question, and really don't have the interaction. So one thing you could say, whether you learn or not from the interviews, they're not boring. So
that's right.
Yeah.
They are not.
Anyway.
So
all right. So guys, have a great weekend. Holiday weekend. We're not going to be here Monday.
Correct.
Markets are closed, so all the webinars are canceled. But I bet you know what? There'll be people in the room paying attention to what Asia and Europe does on Monday.
As a matter of fact, and if you're in Europe, Ryan's out because he has family or something that on Monday. K-Man's actually going to be doing the flow show in European trade on Monday, even though the rest of us will not be broadcasting for F.A.C.E and our morning edge and daily roundup stuff that we do for privately for the ForexAnalytix team. We're going to, in North America, we'll be off on Monday, but K-Man will be broadcasting on Monday on the flow show. So if you don't know how to get there, just go over to our website, go to where it says webinars, and the flow show is right here. It's free for everybody. So,
K-Man's the best new analyst that I've met in the last couple of years.
it's great.
Really, he's a beast. So hang on to his words. I learn from him every time he talks.
Yeah.
All
Hey,
right, so-
oh, and one last thing. If you guys did the non-farm payroll challenge, Ryan is the one that does the calculating. He is out for the weekend. He mentioned it on Twitter that we're going to get to whoever the winner is, or we have 3 winners. And if any of you are the 3 winners, you could have been a ForexAnalytix subscriber. You just get an extra month on your subscription. But if you're not from in our community and you get a free month, great. But you'll have to wait till Tuesday. So just giving you all heads up for those of you that are, if you're impatient, and you're like, "Where's my month?" It's going to be on Tuesday, unfortunately. We're just need to,
yeah.
Where are my $2? Remember what movie was that from? Gosh, what a movie! I wish I had Stelios here right now because he's an 80s movie fanatic. Anyway, Dale, thank you so much for a great week.
All right, guys. All right, listen, everyone, don't just count your pips, count your blessings. If you don't know what they are, if you don't know what they are, just look around and your family, your people, your relationships. And it's a tough business, and it's important to, tell people how you feel, because people aren't mind readers. And Blake, thanks for another great week. Grega, always great to hear your stuff. And
Thank you, man.
yeah. And
Yeah, Greg, it's
Steve,
nice to have you here, buddy.
Yeah, so
And
have a
don't
good
forget,
weekend.
on week ahead video will be recorded by me. So
Oh, that's right.
Yeah, so,
Yes.
yeah.
Yes. Yeah. If you guys love Elliott waves, guess what? Greg is your man, and he's going to be doing the week ahead video this week because I'm going to be in California, not too far from Dale, at a soccer tournament. So
College football starts this weekend. How good can it get?
doesn't get much better than that.
Yeah,
And we're going to be about what, 15 degrees cooler this weekend, right, Dale?
Yeah. There's going to have a break for about 3-4 days, just in
Thank
time for your
goodness.
tournament, man. All right. So adios, everyone. Have a good time, team. Thanks very much. We did our best again, and looks like we're going to have that chance to buy this dip in the dollar down there around 102.5 next week, and short the Aussie. So I already know what I'm planning to do next week. Do you? Okay. Have a great weekend, everyone. We'll see you Monday. I mean, Tuesday.
Thanks, Dale. We'll see you on
All right.
Tuesday.
See you,
All right.
Blake. Bye, everyone.